Department store chain Myer has upgraded its profit forecast for the current financial year after sales jumped more than 12% over the past 12 months. Joining me now is our business reporter, Edward Boyd. Ed, this is a pretty strong result for Myer, which continues to report sales growth. This is despite pretty tough economic environment at the moment.
Yeah, this is a real surprising one, Laura, because retailers are not expected to do well in this profit reporting season. We're going to hear from JB Hi-Fi and Baby Bunting over the next 7 or 8 days. But really what we've seen over the past 6 months has been flat retail sales reported from the Bureau of Statistics. That's all due to obviously high inflation. So Aussies are cutting back on their spending. So it was a bit of a surprising announcement this morning from Myer, where they've upgraded their profit outlook for this current financial year to up by 15 to 21%. So they're expecting a profit of between $69 and $73 million in this financial year, which is very surprising. But part of the detail in the story, though, is most of their profit has come from the first 6 months of the financial year, so basically from June to December last year. And this recent half of the year has been a lot worse. So sales have basically profit has basically declined in the past 6 months. So it's kind of a warning sign to other retailers. So despite profit looking better, the share price today has actually fallen 11% in early trading.
Okay, Ed, of course it is company profit reporting season. We've had some more reports this morning, one from building materials maker James Hardie and coal miner Coronado.
Yeah, Coronado. But James Hardie is an interesting one because they've basically said sales for their fibre cement business, which is their big buildings materials business, which sells products all over North America in particular, which is their largest market. Sales decreased almost 10%. But margins are at record highs. So in other words, they've managed to lift their prices pretty significantly and they're actually performing quite well. So their shares are up 15% in early trade off the back of that announcement. And then Coronado Coal, they've got the series of coal mines in Queensland, but also in America. And today they've reported basically a fall in profit because coal prices have been lower and they attribute rising costs as well. So the cost of producing coal per tonne at Coronado is up 14% in the last 12 months. And they say that's due to inflation, but it's also due to Queensland's new royalties regime, which was introduced on the 1st of July last year. So they're paying more royalties to the Queensland government and not making as much money as they did previously. So their shares have plunged this morning in early trade. And I'm going to chat to their chief executive later this afternoon on the show Business Now.
Coronado?
Yeah. Coronado Global Resources.
Coronado. Love it. Okay, I'll remember that. Ed, thanks so much.